All right, good morning, everyone. It's lovely to be here. Can we hear the size of the crowd through the auditory response here? Awesome, thank you. Thank you for being an amazing audience. I'd ask that the folks at the back come and take a seat. This will be worth your while. This segment has been curated over months of really hard work from the folks on the BD team, from the folks in the ecosystem, and I think you're going to get a glimpse into the future of what this space was meant to do for the last 15 years. And so with that, I'm going to kick it off with a talk about how we think about internet capital markets and what they are in the first place. You know, if you think about capital markets, today's capital markets don't work for everyone, right? Like everybody has a visceral sense of it, and people may reason into it from different places. But you can see, like, folks like Larry Fink talking to investment managers saying it's the most nervous their clients have been since you have these low bond yields, you have asset price bubbles, and people don't really know how the traditional asset allocation model works anymore because the 60-40 portfolio hasn't paid off for a long time. And we all get a visceral sense of this, right? And so it shows up in surveys as well. Like, 27% of folks believe that the American dream isn't, is still accessible to them compared to, say, over 50% 10 years ago. And we've seen this manifest in sort of like our politics, culture, and so the question becomes, if today's capital markets are not working for people, can we build a new capital markets on the internet that works for everyone? Right? And so here's one way to think about this. This is, in 1971, you would have to work 25 hours of median wages to buy 1 unit of the S&P 500. Right? Today, you have to work 195 hours to buy the same unit. And why do we invest? We invest so we can buy freedom, right, of your future. Like, you can buy your future back to do whatever you want to do with your life. And one way of thinking about this is your freedom is hyperinflating. Here's another chart, right? Median or average hourly wages have not kept up with the growth of capital. So if you were part of the people that owned capital or owned assets, then you have a disproportionate return on your asset allocation versus if you are just earning a salary. OK, so what is the solution, right? And you sort of end up in a world where hourly wages as a percentage of GDP has trended down, and then net worth of the top 1% as a percentage of GDP has gone up, right? And so this is an opportunity for us because this is not by design, it's by accident. It's because you have a massive public debt bubble because of which you need to keep bond yields low so you can borrow cheap and refinance debt. And that creates an accidental asset price bubble. And so the question is, can we solve this? Because on a long enough time scale, especially as AI is accelerating, you're going to end up in one of two worlds. Vinod Khosla says AI will be able to handle 80% of jobs. And so increasingly, those wages will matter less. And so the question is, which way do we go? Is it universal basic ownership or universal basic income, where we're essentially creating a welfare economy to take care of those who aren't able to keep jobs or own assets? Or it's what we propose, which is universal basic ownership, where everybody with a mobile phone can own assets. And today, the only technological stack where that is possible, we think, is in crypto, and more specifically Solana, given the sort of the products front-run the promises in our ecosystem. And so an example of this is if you lived in Alaska, you get an airdrop of $1,700 last year. You got an airdrop last year from the profits generated from the Alaska Permanent Fund Corporation, from all of the natural gas and businesses there. Right? That's an example of sharing the profits of the enterprise with the people who are part of building it out. And so that's what internet capital market means. It means we can solve this problem because we have an urgent need to put assets in the hands of people, or we end up in a world where the labor class and the capital class have massive tensions between them, which is all the symptoms you see in today's politics and culture. And so how do we put assets in the hands of anyone who has a mobile phone? You need to be able to reduce barriers for investors to own assets. You need to be able to reduce barriers for issuers of those assets. So let's walk through them really quickly. One of the things that has happened over the last 15 years is a lot of the gains have been in private markets because you have investors who are accredited investors, already wealthy investors, get access to these opportunities because there's not a lot of alpha in public markets. And therefore, they've crowded out retail investors, and their companies are going public later and later in their life cycle, right? With SpaceX and Databricks and all these companies. And you don't have the chance you once had to buy Amazon stock when Amazon went public and get 100x in public markets anymore. So private markets are private. Public markets are saturated. You're all investing in some version of an index fund. They're all overheated compared to valuation now. You either believe that they will continue to be because this time it's different, or we're all crowding into a smaller and smaller part of the public markets, raising valuations beyond what we think is reasonable. And you'll hear from speakers later today about why the passive investing trend could be a bubble. And 30 cents of every dollar you invest in the S&P 500 today, as if you're buying an index fund, goes into Mag 7, so you're super concentrated, right? So all the retail investors are exposed to a small set of assets. The number of public companies has gone down by 50% over the last 20 years. So we have lesser and lesser things to invest into as retail investors. Not all public markets, though, right? What you see here is the number of token launches on Solana and the capital formation. And this is funny, but remember that this same infrastructure can be switched out to launch assets that are productive, that are by issuers of credit, debt, private credit, debt, equity, and a whole long tail of assets that don't exist today in capital markets, right? And the reason you need to do this is because we are hurtling towards a world where if you don't solve the labor capital gap that exists, you have violence on the streets. This is kind of why revolutions are sort of fostered. And we should take wisdom from history, right? And this is part of what we're working on. On one end, it feels inane, and it's all these meme coins. On another end, it's bootstrapping all this infrastructure where you can get companies to start going public directly on Solana, right? Here's, like Uber wanted to pay its drivers in equity when they went public. They could not because of SEC regulation. Similarly, crypto has solved this problem. The way we have is, if you wanted US dollars outside the US, you either had to get cash, or you fill one of these long forms and get access to an offshore bank account. But today, you download a browser extension or a mobile app with a picture of a ghost on it, and you get access to US dollars unfettered, right? We've massively collapsed the ability for, or the barriers to own assets. But bearer assets are new. This is bringing back a practice we always had, where you could, whoever held those bearer certificates, historians of finance here and enthusiasts will know that that used to exist. Whoever held them owned the shares to the company. And so we're bringing back bearer assets, but digitally. And so the next part of the transformation on the financial side will be one where we can bring all these private assets that are in private markets and bring them onto Solana. All right, so that's on the investor side, where anybody with a mobile phone can own assets. This is on the issuer side. Today, it takes about $10 to $30 million to go public, which means a lot of the smaller companies who are super profitable don't have any incentive to go public because it's too expensive for them, and they have this high compliance burden, right? But we think in 5 years from now, you should be able to walk into a coffee shop, and you're like, I love this coffee shop. I want to support them. There's a QR code on the wall. You scan the QR code, and you buy a few tokens that entitle you to some ownership in the coffee shop, and you get streamed dividends every year. And that is an inspired vision for what capital markets should be doing for small businesses and businesses on Main Street, right? And so it is not Main Street versus Wall Street. It's rather getting Main Street access to the new internet Wall Street. All right, let's keep rolling. And today you have, of course, you have alternatives. You have regional exchanges. Those regional exchanges don't have a lot of liquidity, and they're burgeoning. But guess what? They can get distribution by, you can go public on a regional exchange, which lowers the cost of compliance, and then tokenize on Solana, get access to a global bunch of investors. And of course, you also have like these exceptions that have always been there in law. We stand on the shoulders of giants where you could technically go mini IPO. The Jobs Act helped us get this regulation, but the technology stack was not available until today. We can cue the video real quick so you get a sense for what this world looks like.
When you have a model that heavily incentivizes private equity groups to basically be building these cookie cutter development complexes, dropping in a Whole Foods, dropping in a papyrus store. You're creating an economic development on paper that doesn't actually feel like economic development when you're walking down the streets of these communities themselves. My name is Nick Matthews, and I'm the CEO and co-founder of Mainvest. Small businesses are the foundation of the American economy, and access to capital is the #1 challenge that small businesses across America face. Mainvest gives communities, not corporations, the ability to build the main streets they want to see. Mainvest isn't crowdfunding, Mainvest is investing. People are coming on not just to support local businesses, but also as a means of diversifying their portfolio into a new asset class.
So what this gives you is, entrepreneurs have tried this in the past. There was a company called Mainvest that unfortunately got shut down during COVID, where they tried to allow people to invest in their community businesses that were cash flow positive. And guess what? They didn't have the technology stack that was global that we do now today. And so we're very excited, as you'll hear from the rest of this session, to take advantage of some of those prior efforts that have happened. Of course, you have direct listings, and you'll see later in the day folks talk about why that's going to save you money. I want to get to the end state here and invite on the amazing speakers that are going to follow. The end state, I thought, was captured by this tweet that's kind of funny, but also true, which is sort of the way crypto tends to be. It starts with the inane and very quickly becomes profound. And it is this idea that, like, oh, tech finance is kind of vanilla. Jim Simmons gave us quant-driven trading. Milken gave us junk bonds. But what did Silicon Valley give us? YC safe notes with a discount, boring. Right? Wake me up when I can buy defense tech junk bonds collateralized by annual secondaries. I want to see Stripe employee option pools securitized and sold with triple leveraged exotic swaps. Right? That's a joke, but what gives you is the ability for you to financialize all of the productive assets in an economy so you can have anybody who participates in that economy be an owner of that economy. And that's part of what you're going to hear for the next 3 hours, and I hope you enjoy this. We're incredibly excited to think of what this dream about what this end state looks like. It probably is one where capital markets are a feature. They're seen as a good thing, just like you're now, as an Instagram user, it made everyone a photographer. So Solana will make everyone an investor or a trader over time as these productive assets in our economy trapped in private markets come onto the blockchains. So we hope you enjoy the programming for the next 3 hours. Thank you very much for having me.